Good morning, everyone. Welcome to Morning Trade with Money Control. I'm Karunya Rao. And in the next half an hour, we get you actionable trading strategies, sectoral trends, and most importantly, address your life queries. So let's start by taking a look at the global handover. Not looking encouraging as of now. Despite the hot US inflation data, yes, we saw European markets which closed high yesterday. SUC 600, FTSE, they gained nearly 1.5%. DAX and CAC also rallied quite a bit. In the US, April's consumer price index showed an 8.3% jump in prices, which was higher than the 8.1% increase expected by the street. The price surge remained near the 40-year high pace of 8.5%, which we saw back in March. As investors digested this data, Wall Street slipped with Dow and S&P dropping more than 1%. Nasdaq fell 3%. Stocks across Asia are in the red early this morning, and SGX Nifty is also indicating once again a gap down for the Indian markets. Several large cap companies have lined up today to deliver their earnings. There's L&T, Tata Motors, Apollo Tyres, RBL Bank, Coforge, to name a few. We tell you how to trade with these counters ahead of their numbers. And finally, in our What's Our Trending segment, we're tracking the crypto crash. More details on that later on in the show. So let's get started and bring on board Ajit Mishra from Religare Broking. Ajit, thank you so much for taking time out and joining us today. Want to understand how bad does it look, the trade setup? We're already down more than 1.5% on the SGX. Gap down opening expected once again.
Good morning, Karunya. So yes, the markets are, really under pressure, and it's not something new that, what we are seeing today, that largely we are, during the day, we see that market was in a range and try to witness some sort of consolidation. But the global clues are not allowing the market to sustain, at any level. So, psychologically and technically also, we had the support of around 16,000. Yesterday, we penetrated this, zone, and we rebounded thanks to the resilience in the banking index. But today, again, we are seeing that, the global clues are not very supportive, and we are seeing a gap down opening. But Karunya, one thing which is important is that, if you have noticed that from 18,150 highs to around 16,000 levels, we have around 2,000 point of correction already in the markets. So some sort of consolidation, some sort of rebound is definitely expected. And the kind of resilience that we are seeing in the banking index around 34,000 mark, that is something which is, is helping the market, to witness any recovery or see some consolidation. So the idea is, as long as the trend is down, obviously, we are not recommending to bottom fish or catch the falling knives, especially in the index. But on the stock specific front, we are getting opportunities on both sides of the market. Largely, yes, all the sectors and, stocks are, trading in tandem with the index. But yes, we have select pockets which are seeing resilience and trading at record highs as well. So the prudent approach is to maintain sell on rise in the index till 16,300 is breached decisively. And, but at the stock specific front, one should maintain long and short approach.
Okay. And of course, we will discuss many of these opportunities in the course of the show as well. How bad does Nifty Bank look at this juncture? Is it equally going to be, suffering because of the global carnage and because of the overall weak sentiment in the market? Does it look equally badly positioned?
So in fact, banking is, helping the index to sustain, or maybe, you can say that it's capping the downside, the kind of, selling pressure that we are seeing from the other sectors, be it IT, and select stocks from the energy space, FMCG. Banking so far from the last, especially, 3-4 days, is trying to hold 34,000 mark.
Yeah.
That is something which is positive. And in fact, the way we were trading, yesterday at the close, expectations were high that, we might see some further rebound in the banking index above 34,800 mark. So I feel that banking would comparatively looking stronger, and in case if somebody have to go short in the index, it has to be nifty. When it comes to selling on rise, banking I feel is likely to consolidate further in this range of 34,000, 34,800 to 35,000 levels. Unless we see a decisive breakdown below 34,000 levels, we recommend to avoid any short positions in the banking index for a time being.
Okay, so let's understand how some of these stocks that are going to be in the limelight, how they are positioned today. Lots of earnings expected almost in the last leg of the earnings season now. L&T, a big name to watch out for, and just like any other blue chip company, even this has seen some amount of pressure in the last 1 month. All of these, not all, but many of these names are down 10%, and so is L&T from the large cap space. Do you think it's a prudent idea to trade with this stock ahead of its numbers? How is it looking on the charts?
See, in the capital goods space, I feel ABB and Siemens are, well positioned,
Okay.
especially if you see the kind of traction that we have seen in ABB post numbers, and Siemens also is, showing the similar kind of trend before the numbers. LT is slightly on the back foot at present, and in fact, the crucial support, which was the previous swing low, close to around 1600 levels, it has breached that zone. So, which is not a very encouraging sign before the numbers. But yes, the positive or the silver lining is that we have a minor support around 1500 to 1550 zone. So that may result in some sort of consolidation. But that's important that it should hold this level post numbers also. And in that case, we may see some rebound. But the overall trend still looks negative to us when it comes to L&T. So
Okay.
the preference should be on ABB and Siemens when it comes to the capital goods sectors.
In fact, L&T definitely has seen some improved construction activity, which the street expects will drive growth on a from a fundamental angle. But Q4 typically is a seasonally strong quarter. But yes, Ajit is recommending that one looks at a Siemens or an ABB instead of an L&T. And in fact, Siemens also is lined up to deliver its numbers today. So let's see how that pans out. But let's move on to Tata Motors again. This one will definitely see a lot of action as well. The sales numbers have been definitely improving for Tata Motors. So fundamentally, there are some green shoots there. FY20, the operating leverage for FY22 and even for Q4 of FY22 are likely to be good this time around. Because of that, margins are likely to come in slightly better. But talk to us about the fundamentals. Last 1 week, 5 days of trading, the stock is already down 10.5%, 11%. Do you see any action that one can expect today?
If you talk about the auto pack, Tata Motors, was amongst one of the top performer, till last month, and now we are seeing some sort of, profit taking and consolidation in this stock as well. I would recommend, in case if you are holding any position at present level, you should continue to hold, especially if you are holding in a cash segment for the investment purpose. But from a very short-term perspectives, 370 should be your stop loss, because that's the area basically where we had the last swing low. In case if it breaches the same, then we may see the stock retracing towards 350-55 zone also. So, upside also seems capped at present, considering that, the overall sentiments are still bearish, and we are seeing selling pressure on the every rise. But closer to around 400, 410, in case if a short-term trading position, you should try and book profits.
Okay. Another auto name that's going to be in focus is Apollo Tyres. And unlike many of other, auto and auto ancillary players, this one has not declined much. In fact, it's just broken even in the last 1 month, up by about 0.5%. 196 levels, good time to enter an Apollo Tyres, or do you see some pressure there as well?
In fact, I would recommend, to wait for a close above 210, because that's the area basically from where it is, facing resistance in this recent rebound. And broadly, it was hovering in this range of around 210 to 250 for almost 4-5 months before the breakdown. And now we are retesting those zones. So it's a very critical make or break level for Apollo Tyres. And in case if it manages to hold 210, then we can again see the swing extending towards 240 to 250 levels. So for a time being, it's an avoid, but above 210, definitely you can go long. With 195 should be your stop, and 250 as a positional target.
Okay. All right, Ajit, lots of queries also coming our way. We'll line up those queries. Going to go to my colleague Manisha Gupta for a moment there and talk about what's happening in the crypto markets. Well, equity markets definitely continue to be under pressure, and cryptos also. I mean, it was supposed to be digital gold, Manisha. What happened there? I mean, what's causing this kind of a massive correction in the digital asset space?
Karunya, morning. Well, yes, it's a very sharp meltdown that we have seen in the cryptocurrency space. Overnight, we've seen 20 to 35% of a decline for the likes of Avalanche and Solana and Cardano. They fell more than 30% as well. And Bitcoin is trading at a 16-month lows right now. It has made a low at $27,700. The high was 69,000, so clearly more than half from those kind of levels. The trigger has been clearly the Terra stable coins. Now, most stable coins are pegged to traditional assets like the dollar or the gold or government-backed paper, etc. But Terra stablecoin is an algorithmic stablecoin, so it works on an algorithm or a complex formula. It is supposed to be equal to $1, but that value could not be held, and it has declined very sharply. At one point in time, half a dollar as well. And, markets are selling Bitcoin to ensure that this spec continues. So it has become a vicious cycle. People are selling Bitcoin to ensure that the stablecoin contains. So until the market settles and until that happens, you perhaps will continue to see even further decline. So even as it is oversold, I am assuming some more decline is still on cards.
But there's a section of the market which is saying that when the equity markets now are falling, enthusiasts are justifying that the fall in the crypto assets is in sympathy with the tech rout that's going on globally. Are they kind of running out for, reasons to justify what's happening in the crypto markets? Because looks like it is going to be this way, at least for some more time. There will be more correction, more pain for cryptocurrencies. What are you picking up from experts?
Oh, well, absolutely, Karunya. I mean, that is one of the reasons, really. In last 2 or 3 years, we've realized and understood that crypto is not very different from the other traditional asset classes, and it definitely is not gold. So yes, as we see the equity markets and the other high yield or risky currencies, that's exactly what the crypto are doing with as well. And as you mentioned, the sell-off in the technology sector within the equities also is impacting cryptocurrencies. So is the higher interest rate and the strength in US dollar. Those have been the generic reasons, absolutely. And then what Terra as a stable coin has done seems like a very big reason for the last couple of sessions now.
Okay. With various governments also tightening regulations on cryptocurrencies, we don't know what the future holds for this particular asset class. A lot of questions already started coming our way, even on cryptos. Manisha, now that I have you here, just quickly, one we would like to address. Selva Ganpati is writing to us. Is it a good time to buy cryptos? If yes, which ones? Is any pocket of the entire crypto basket looking good right now, or is it a complete avoid? What are you picking up?
So there has been a very strong sell-off, whether it is the meme coins like Shiba or Dogecoin or the other layer 1 and layer 2 blockchains as well. But, within the sell-off as well, there is only Bitcoin, which hasn't declined as much as the others have done. So yes, in the last 10 years, when you look at the cryptocurrencies history, we have seen these kind of volatile moves come in. Remember, we've seen $8 and $800 and $8,000 for Bitcoin as well. So even at $27,000, there are people, long-term holders, which still are in profit here. It is only those investors, the new investors, who perhaps bought it at 40,000 or 50,000, who are making big losses right now. But the long-term holders, people who bought in 2016, 2017, are still sitting on a lot of money here. So I think with cryptocurrencies, you learn that it is only the long-term investor who always makes money.
Well, just like any other asset class then. Thank you so much, Manisha, for joining in and giving us an update on what's happening in the cryptocurrency space and why, more importantly. Let's shift gears and once again talk equities. Ajit is standing by. Let's bring him on board. Lots of queries also to be addressed today. So, Ajit, there's a question coming in for BSE. Krishna has written to us. He has bought BSE at 1,035 levels, but the current market price is 700 or 720 actually. He wants you to suggest him whether he should still hold on to it or book his losses and exit.
So Krishna, my recommendation to you is to use any rebound, because I'm assuming that you have bought this position for trading and now it has converted into investment. So that should not be the case, especially when the markets are at the record highs. The markets are trading under tremendous pressure, and some of these stocks are showing the different kind of a trend that they are showing resilience and trading at the record highs. So now we expect that this profit taking may extend further in BSE, and closer to around 650 is the area basically where we have the next support. So in between, in case if it witnesses any bounce closer to around 850, 900 zone, it's prudent strategy to exit that position if it's a short-term trade. In case if it's an investment, then you can continue to hold.
Okay. All right. Well, I hope he's taking note of that. There's some queries also coming in for Mahanagar Gas. Rohit has written to us. He's asking if there are any good possibilities of an upside move. Uh, it was up 3% yesterday, perhaps on back of results. It's been in the focus and it's been doing well. At 770 levels, do you think there's further room for upside?
See, in fact, we have seen a very sharp correction in the gas distributors in the recent past, and now we are seeing some sort of rebound. So definitely, it looks encouraging that we may see some this rebound extending further also. So you can continue to hold this position, and but your stop should be not more than 3% down from the current levels, because we are seeing erratic swings in the gas distribution name also. And upside also seems capped at the current level. So try and book profit anywhere around 560, 580 zone.
Okay. All right. There you have it. The view on Mahanagar Gas. Moving on, there's a question once again coming in from Rohit itself on Kaplan Points. Has been consolidating since quite a bit. Any chances of a breakout there?
Yeah, so Kaplan Point, this stock has been hovering in a range. He's rightly mentioned that 660, 850 is broadly the zone, and the volume has also dried down now. So we may see some sort of rebound, but the upside in the near future seems capped. Close to around 750 to 800 is the area basically where we have resistance. So for the fresh position, I would recommend you to maintain a stop at 600, 620 rather, and closer to around 750 to 800, you should try and look for profits.
Okay. The next question is on PFC. Aditya Kulkarni wants your view on this counter. If we look at the year-to-date movement of PFC, it's largely been within a specific range. So, any meaningful action that you foresee, Ajit?
See, we need a decisive close above 118 for any sustained up move. Otherwise, this consolidation may extend, as you rightly mentioned, that it's hovering in a range closer to around 125 on a higher side and 105, 100 on the lower side. So if it's a very short-term, a trade that you wish to take, I would recommend you to wait for a breakout above 115, 120 zone, okay. And you may, enter around 100 levels also, because that is what the trend is that we are seeing rebound from 100 levels to around 120 zone. So anything above 115 or maybe closer to around 100 levels, you can initiate fresh bounce. In between, please avoid.
Okay. Another outperformer in yesterday's session was Z Entertainment, and Pradeep wants to know if it's a good idea to look at Z as a investment idea. 241 is where it shut shop yesterday. What is your advice?
See, Z has been in news, of late, and we have seen very volatile swings in last 6 months, and now we are seeing this stock stabilizing. But yes, the profit taking is still continuing in the stock. So I would recommend, in case if your view is long term, definitely it's a good level to accumulate, because that's the zone basically from where we have seen the breakout last time, close to around 30 levels. So we are closer to that mark. But from a very short term perspective, I feel that upside closer to around 260, 270 zone, we have a very strong resistance, because multiple moving averages are coinciding around that zone. So for a very short-term perspective, your stop should be at 228, and any rebound towards 260, 65 zone, you should try and book profits.
Okay, all right. Moving on then to Relaxo. Kamalaja wants to know if it's a good idea to accumulate after the quarterly results. Yesterday is when Relaxo declared its Q4 report card. 1037 is where it's perched at, and like many of its peers in the mid and small cap space, Relaxo also has been slightly sluggish in the recent past. But it has been the street's darling. It has done very well in the last 1 year. Over the last many years, it has proven to be a multi-bagger for many people, many retail investors as well. So at these levels, do you think it's a good idea to grab the opportunity and enter?
Certainly, because Karanya, that as you rightly mentioned, that we have seen this stock, yielding exponential returns for the investors year after year, and this correction, in the past also we have seen, intermediate profit taking phases and consolidation phase. So I believe that it's witnessing the same, into the last 3-4 months, and this zone close to around 1000, we have multiple supports on daily and weekly charts. That indicates that this is a good level to enter in case if your view is long term. In the short term, we may see further consolidation and marginal dip towards 950, 960 zone also, but one should not worry in case if the view is for a year and more than that. And upside, closer to around 1160, 1170, you will see the stock again regaining the momentum. So yes, it's a buy. It's a buy on dip candidate with 950,000. That should be the accumulation zone, and 1150 as an immediate target. And beyond that, also you can continue to hold.
Okay, all right then. Apollo Hospitals is something I'd like to address. Anju wants to know if it's the right time to invest. There's been a 20% correction on this stock in the last 1 month, Ajit. I'm sure many investors are tempted to buy. What would be your suggestion?
So yes, it's a very critical level, and in fact, the kind of decline that we have seen last 3 weeks, almost vertical decline in the stock. The stock is down around 17% in this month so far. We have immediate support around 3600 mark, but I doubt that it's too early to say that it's going to be a reversal from this area. So in case if you are an investor, you should accumulate this stock. Not at one go. You should gradually accumulate the stock in this range of around 3300 to 3600. And yes, upside closer to around 4250 to 4300 is the area basically where we're going to see the resistance. But I feel that being an investor, you should not worry about the short-term resistance. And this zone definitely looks tempting, especially considering the kind of decline that we have already seen from the recent top, and the overall structure still looks positive to us when it comes to the long-term charts.
Okay. In fact, the same viewer wants your advice on Apple as well. Given the slump that the stock has also seen, would you advise somebody to buy at the current level?
See, FL, I would recommend to wait because, in the month of January, it made an attempt for a fresh breakout, after consolidating for nearly 6 months. But it has failed that breakout now, and we are seeing the stock gradually inching lower. So generally, we see that the failed breakouts yield, more returns for the bears, especially, post the breakout failure. So any zone close to around 930, 940 could be the area basically where it may take a support. But as of now, it's definitely an avoid for fresh buying. And in fact, if you have a position, you can try and liquidate that and accumulate at the lower level close to around 900, 920.
Okay, all right. Well, we're running out of time. Unfortunately, we won't be able to take more queries, but we have the hot stock segment where Ajit, we would like you to share your stock ideas with our viewers. Go on, Ajit, your stock ideas for the day.
Yeah, so see, as we have been discussing that the markets are trading under tremendous pressure, taking clues from the global counterparts. But stocks, we are still seeing certain pockets doing exceptionally well. And the first name on that list is Coromandel. We have seen this stock, making the record highs, retesting the record highs, despite of the kind of carnage that we are seeing in the market, and still hovering around the record highs. So after this pause, what we have seen last 1 week, it's offering an opportunity to go long. And, the overall structure indicates that we are still in a long-term bull market for Coromandel. So close to around 865, you should maintain your stop loss, and your immediate target should be at 980. Similarly, we are seeing some of the FMCG name doing exceptionally well, and Godrej CP, Godrej Consumers, is something that we recommend to go long in. The stock has recently made a double bottom pattern on the daily chart, and after consolidating in a flat pattern, now we are seeing a breakout. So near term, we are eyeing closer to around 830 levels in Godrej Consumers. So your stop should be at 750 for this long position. And lastly, the IT stocks, we have already seen very strong decline, but Persistent has been holding for quite some time. But now we are seeing some sort of short positions, positioning in Persistent as well, and we may see some profit taking in days to come. So closer to around 3550 is what we are eyeing in Persistent in the near future. So your stop should be at 4010 to go short in Persistent.
Okay, great. Buy on Coromandel as well as Godrej Consumer and sell on Persistent. Thank you so much, Ajit, once again for joining in and for sharing your views with our viewers and helping them out. With that, we're going to wrap it up on Morning Trade with Money Control. But stay tuned. We have markets with Santo and CJ coming up next.